Common myths about Bitcoin. Bitcoin is an innovative technology that has made waves around the world, but with its rise to fame comes a slew of misconceptions. Let's debunk some of the most common myths surrounding Bitcoin. Myth 1. Bitcoin is a bubble. One of the most persistent myths about Bitcoin is that it's simply a speculative bubble that will eventually burst. Critics have long called Bitcoin a bubble, but the cryptocurrency has continued to grow in both adoption and value. Why this myth is wrong? Real utility. Unlike traditional speculative bubbles, such as the dot-com bubble or housing bubble, Bitcoin provides real utility and solves significant problems. It offers a decentralized, borderless, and censorship-resistant way to send value, making it particularly useful in countries with unstable currencies or restrictive financial systems. 2. Network growth. Bitcoin's increasing adoption by individuals, businesses, and even institutional investors proves its value. Major companies like Tesla, MicroStrategy, and Square have added Bitcoin to their balance sheets, while many others accept it as a form of payment. This ongoing growth in use and acceptance stands in stark contrast to speculative bubbles, which generally lose interest as prices drop. 3. Historical performance. While Bitcoin's price has experienced wild fluctuations, it has consistently grown in value over the long term. Early bubble calls have been disproven as the cryptocurrency has continued to gain legitimacy and value year after year. Conclusion: Bitcoin is not a bubble. It's a technological and economic shift that's being adopted globally. As more people understand its potential, Bitcoin's real-world use case will continue to prove its worth. Myth 2. Bitcoin is only used by criminals. Bitcoin's association with illegal activity is one of the most well-known misconceptions about the cryptocurrency. This myth largely stems from Bitcoin's use in early illicit platforms like Silk Road, an online marketplace for illegal goods. However, this doesn't tell the whole story. Why this myth is wrong? 1. Bitcoin's transparency. Unlike cash, Bitcoin's transactions are recorded on a public ledger known as the blockchain. This makes it far easier to trace Bitcoin transactions than those involving traditional currencies. Law enforcement agencies worldwide use blockchain analysis to track and investigate illegal activities. 2. Illicit activity is a small fraction. Studies have shown that illicit activity in Bitcoin transactions accounts for a tiny fraction, less than 1% of total transactions. In comparison, cash, which is also used for illicit purposes, is much more difficult to trace and track. 3. Legitimate use cases. Today, Bitcoin is used for a variety of legitimate purposes, including remittances, online payments, store of value, and even as a hedge against inflation. Many businesses, including major retailers and financial institutions, accept Bitcoin as payment or hold it as a store of value. Conclusion: while Bitcoin was used for illegal activities in its early days, today it is predominantly used for legitimate purposes. The cryptocurrency's transparency and the increasing focus on regulation make it much harder for criminals to use it with impunity. Myth 3. Bitcoin will be banned. Another common myth is that Bitcoin will eventually be banned by governments. While some governments have imposed restrictions or regulations on Bitcoin, the idea of an outright ban is unrealistic due to the decentralized nature of the cryptocurrency. Why this myth is wrong? Decentralization. Bitcoin operates on a decentralized network of computers, nodes, that are spread across the globe. No single entity, government, or organization has the power to shut it down. Even if one country were to ban Bitcoin, the network would continue to operate and grow in other regions. 2. Global adoption. Bitcoin has been adopted in many countries around the world, from El Salvador, where it is legal tender, to the United States, where it is recognized as property for tax purposes. Banning Bitcoin would be akin to banning the internet. It's simply not feasible. 3. Regulatory focus. Rather than banning Bitcoin, governments are more likely to regulate it to ensure compliance with existing financial laws, such as anti-money laundering, AML, and Know Your Customer, KYC requirements. These regulations are designed to integrate Bitcoin into the global financial system rather than shut it down. Conclusion. While some governments may attempt to restrict or regulate Bitcoin, the idea of it being banned outright is highly unlikely. Bitcoin's decentralized nature and global adoption make it virtually impossible to stop. Myth 4. Bitcoin is too volatile. It's true that Bitcoin has experienced significant price fluctuations, especially in its early years. However, the idea that Bitcoin is too volatile overlooks the evolution of its market and adoption. Why this myth is wrong. 1. Decreasing volatility over time. As more people and institutions adopt Bitcoin, its market is becoming more liquid, and its price volatility is gradually decreasing. In the early days, Bitcoin had low liquidity, and large trades could move the price significantly. However, as more investors and companies enter the market, Bitcoin's price is becoming more stable. 2. Long-term store of value. Many investors now view Bitcoin not as a short-term speculative asset, but as a long-term store of value, akin to digital gold. These long-term investors are less likely to sell during price fluctuations, which helps stabilize the market over time. 3. Volatility is not unique to Bitcoin. Every asset, whether stocks, real estate, or gold, experiences price fluctuations. Bitcoin's volatility should be viewed in the context of its early adoption phase. Volatility is expected during the growth of any new technology or asset class. Conclusion. While Bitcoin's price has been volatile in the past, this is gradually changing as its adoption and liquidity increase. Bitcoin is evolving into a stable, long-term store of value for many investors, and volatility should be viewed as a temporary phase in its maturation. Closing thoughts for Part 2. Bitcoin is a groundbreaking innovation that challenges the very foundation of our financial system. By understanding the myths surrounding it, you can better appreciate its true potential. Bitcoin is not just a speculative investment or a tool for criminals. It is a solution to some of the most pressing financial problems in the world today. By debunking these common myths, you're now one step closer to fully understanding Bitcoin's role in shaping the future of money. As we continue to explore Bitcoin's potential, remember, myths are often born from fear, misunderstanding, or misinformation. By educating yourself and staying open-minded, you'll be prepared to see Bitcoin for what it truly is, a revolutionary force for financial freedom and innovation. If you enjoyed this video, subscribe to the channel and like the post, please. It will enable me to make more education videos on Bitcoin.